All right. Well, thank you very much, Adrian and ERP VAR, for letting us present on this topic again. Excited to share 17 secrets to credit collections management. So I guess we'll go ahead and get started. There's three parts to the presentation today. The first part, we're going to kind of talk about why we developed Anytime Collect and why accounts receivable is important. Then we're going to go in and we're going to talk about the 17 ways that you can be more effective, and then we're going to wrap up with just a real high-level overview of the solution, Anytime Collect. But to get started, you know, there is an accounts receivable crisis, if you will, that's going on out there. And I want to paint the picture so that we're all on the same page. We all understand the importance of managing our accounts receivable. A lot of people don't realize this, but accounts receivable is typically either your largest asset or your second largest asset in your business. And, you know, a lot of people don't think about it that way. You know, if you're a service-driven company, you're going to think it's your employees. If you're a manufacturer, distributor, you're going to think it's maybe inventory. But if you take a good hard look at your balance sheet, accounts receivable, if you're offering significant credit terms to a lot of your customers, it's going to be your AR. And that is your largest source of working capital, you know, within your organization. And a lot of companies don't manage it properly. This is a study that we found out there. Approximately 39% of invoices are paid late. I would argue that that number is actually significantly larger in the smaller organizations because they don't have formalized processes or responsibilities within the organization for managing this. How long does it take your customers to pay you? Industry average is around 61 days. Now, average credit terms for customers across all industries, across the country, are at 28 days. You can tell there those two really don't jive. I'm giving you 28 days on average to pay, but it's taking you on average 61 days. What we're going to talk about later in the presentation is the companies using a CCM or credit collections management system like Anytime Collect. What they're able to do is reduce their day sales outstanding by 10 to 20%. What does that mean? That means you're going to get paid an average of 9 days faster, and that's pretty significant. Another study, 52% of respondents have reported that their customers are asking for extended payment terms. So customers are feeling a credit crunch themselves, and it's taking them longer to make payments. 48%, according to a couple studies we've looked at, have reported that their customers are delaying payment without prior agreement. Customers aren't going to call you and say, hey, you know, can I take a little longer to pay on this unless you call them first. So that's not really that striking. What is striking is the fact that there's 48%, nearly half of customers are taking longer to pay. This is pretty telling as well. The longer that an invoice goes unpaid, the less likely that it will ever be paid, or at least paid in full. And we've got a little chart over here on the side. If you let your invoices age to 3 months, 74% of them you're going to get paid on. So that's 26% that you're not getting paid on, or at least paid on in full. You cannot afford to let that age to 6 months because you're only going to collect on 30%. And heaven forbid it gets to 12 months, you're going to collect on 10%. So we know this. It's intrinsic that if we're more proactive early on in the process, we're going to resolve disputes. We're going to be kind of changing the way that our customers perceive how we manage our credit terms. You know, if we offer net 30 and we know we don't call until 60 days after, we might as well offer net 60. When we say net 30, it should mean net 30, you know, unless there's an issue that we need to resolve. And there's a pretty good business case for this. This is just one of many, many examples on where your business can save money by being more proactive in managing your accounts receivable. Most businesses write off about 4% of AR annually. a pretty easy number to look at, right? You can go into your accounting system and you can find out what did we write off last year, figure out what that percentage. The percent will range depending on the nature of your business and the industry. We've seen it as low as around 1% in some industries. We've seen it as high as 9 or 10% in some industries. But let's take the industry average at 4%. What does that mean? If you're a $10 million business, you're doing $10 million in annual credit sales, that means you're writing off $400,000 every single year. What if you had a way, what if you had a process, what if you had a system that could get just a 10% improvement in that? That's going to mean that you're selling another $40,000, you're saving another $40,000 annually. In a lot of businesses, that's a pretty significant bump. You know, if you're a distributor and you know, you're operating on 1%, 2%, 3% margins, you got to sell a lot more product to make up $40,000. You know, you can save this across the board in other areas as well. This is just one example. And it's a quote from our good friends at PayStream Advisors that are kind of an analyst group that monitor the accounts receivable industry. And what they found, and we all know this to be true, ERP solutions have been woefully inadequate in terms of credit collections functionality. There's sort of this big gaping hole in almost every single ERP system or accounting system on the market. We manage everything from marketing to creating the sales opportunity in CRM to selling it, creating the order, managing the distribution, the procurement, the manufacturing, or providing the service in a project system or in a job cost environment. All of that we have processes for until we get to the point where we create that invoice. And what happens when we create that invoice? Everything stops. It goes blank. We have nothing to help us manage the process from sending the invoice to the time when we get paid. And that's why we build Anytime Collect. Last slide here, question for you all, and a lot of you may not know this. Who handles your collections today? In most cases, it's going to be one of these people, either an office manager, a bookkeeper that isn't really trained. They don't know how to handle credit collections. You just give them an aging report and you tell them, hey, here's the folks that are past due, go call them. But they don't know how to do this. You might have a part-time AR clerk, and collections is something that they hate to do or they only do when they have to. Or it could be your CFO or your controller. And in a lot of cases, when I talk to our customers and our prospects, before they start using the software, it's nobody. There's nobody in the organization that handles collections. And that's a problem. So how do you handle collections today? If you're like most of our customers, you have this. You have a variety pack of highlighters. You're going to print your aging report out. You're going to grab your variety pack of highlighters. You might have half a dozen spreadsheets. You might be going into your email. You might be going into your CRM system, into your accounting system. It's like you have all this data all over the place, right? But the highlighters are a pretty good tool here. How else do you handle collections? You wait until you can't make payroll and you start dialing, right? Or your boss wants to make some big capital expense and you look at AR and you say, hey, there's a lot of money sitting out there. Let's start dialing for dollars. I've heard this one before. People have told me we don't have a collections problem. If they don't pay, we just send them to third-party collections. Not exactly the most effective way of managing AR. Most collection agencies are going to charge you a fairly significant amount to collect on the past due balance. And in some industries, that's going to actually result in a loss, right? You're going to spend more collecting than you would have, selling it outright. So you have to avoid third-party collections at any given time. Here's the other one, put them on credit hold and hope they pay. This works if you have a captive audience, if your customers need the products that you provide and they don't have an alternative. But if you put them on credit hold and you're selling a commoditized product, they're just going to go online and find somebody else to provide it, and then they won't pay you. And then the last one, call in a favor from the guy downtown. Let him come in and handle collections for you. So there's a better way. What we're going to talk about now is we're going to talk about 17 secrets to credit and collections management. And these really aren't secrets. These are things that we all know, but sometimes we forget. Before we start, I love this quote. If you don't know where you're going, you will probably end up somewhere else. We need to know where we want to be from a credit collection standpoint. Okay? Once we identify those goals on where we want to go, and Windows decided they wanted to kick me over here, so let's go back over here. Before we get started, we really need to do some research and figure out where we want to go, where we're at today. Otherwise, we may end up somewhere where we don't want to be. Okay. So step one, first secret here. Again, not really a secret. Let's start with doing some research. Let's identify where we're at today. Where is our day sales outstanding? How long is it taking our customers to pay us? And where do we want to be? What are our goals and our metrics? Do we want to get invoices out to customers earlier? Do we want to reduce errors on those invoices? You know, what is the percent that we want to improve by? Do we want to reduce DSO, day sales outstanding, by 10%, 20%? Do we want to reduce disputes by 10 or 20%? So just kind of setting those goals on where we want to be. And where do we get some of this research? Talk to our employees. You know, talk to the folks in sales. Talk to the folks in accounting. Find out what they know. Survey your customers. You don't have to survey them all. Make sure you have a representative sample, and call them and ask them. You know, how can we better serve you? What are the areas that we can improve in? Maybe they have a hard time understanding your invoice. Maybe it's a simple invoice change. You know, maybe you continually miss certain information on the invoice that's required for them to process a payment. Look at your historical data. Figure out, where have you been? Are your customers paying you later than before, or earlier before? Are you making improvements? And then look at industry benchmarks. There's an organization called the Credit Research Foundation, or the CRF. I believe the website is crfonline.org or .com. I think it's .org. And you can go out there and you can get a free report if you choose to participate in the report. And it will benchmark your accounts receivable and your collections against your peers in your industries for companies of a similar size. So a lot of companies don't know where they're at today, if they're doing a good job or not. You go out to the CRF website and get that report and see where you're at. The next step after developing all this research is to create a plan. And we've got some tools we're going to talk about later that we make available to you, but you need to have a process. You need to define, what is our credit policy? How do we handle certain things in credit and collections? What is our collections process? What does that look like? If there's changes we need to make, or we have exceptions and disputes and customers that want payment plans, who's responsible for that? What's the approval workflow? And clearly define roles in the process. Who sets up credit terms? Who has authority to change credit terms or increase credit limits? You need to have a picture of who's involved in this process. Second secret, provide timely and accurate information. Again, none of these are secrets. Are your invoices correct? A lot of times they're not. Were they sent out in time for your customers to process payment on time? We run into this constantly. If you're offering your customers net 30 terms and you only process invoices every other week, there's a chance that you're now 2 weeks in before you even create the invoice or send it to your customer. Then it's got to take a couple days to get there in the mail. Once it gets there, if they're a large organization, it's going to take them a couple days for that to filter through to their desk. And if they're busy, they may not see the invoice, and it may take them another couple days. At best, they may have a week until the due date to process payment. Now, if they stamp the approval on that invoice and they send it over, again, large organization, it might take them another week to send the payment. The trick here is to get the invoice to the customer as fast as possible so they have as much time as possible to process the payment. Why are invoices in dispute? And we want to make sure that we are eliminating every possible reason that they might not pay you on time. And they're not going to call you if the invoice is wrong. They're going to wait for you to call them. And you need to identify things that happen over and over again, get to a root cause analysis, and then prevent it from happening. There's a study out there from TermSync that showed that 49% of disputes may be related to missing or incorrect purchase order information on the invoice. That's a pretty easy fix. You know, if you have customers who require a purchase order and they're not going to process payment until the invoice has their purchase order on it, make sure you put the purchase order on it. And there's ways that we can do that with the software. Measure. I'm a big fan of measuring results. So we're going to develop some key performance indicators and things you need to ask yourself. Where are you at today? Where are some areas where you know you can improve? How can you impact results, and how will you measure those results? Do you have a system, reports, any way possible to measure the efficiencies you're gaining? Some of the possible key performance indicators you might want to consider. We'll talk about cost to credit later, but how much is it costing our customers, or our customers costing us above and beyond their agreed upon credit terms? Am I able to forecast my cash flow accurately? What's my sales to invoice delivery time? If it's taken me 2 weeks to get an invoice out on average, can I reduce that to a couple days? What's the total number of disputes I'm managing, or this total amount of dollars that are in dispute? And what's my total average days to pay, or my DSO? Right? These are just some of the KPIs that we can set up and we can track to find out what impact we're having on our bottom line. Secret number 4, define roles and responsibilities. Who can put customers on credit hold? Who can increase their credit limits or change their credit terms? Who's responsible for making the collection calls? A lot of companies don't have somebody responsible for that. And how do team members collaborate? Some suggestions for you: clearly define the roles and responsibilities. Assign accounts to collection reps if you have, more than one person internally that handles credit collections. Assign accounts. And define goals by employee so that they then can be responsible for impacting those improvements and have their own sort of set of KPIs. The Credit Research Foundation, again, estimates that 20% of credit departments do not have, only 20% of credit departments have formalized policies. And if you're a smaller business online today, you probably don't even have a credit department, so it's a good chance you don't have a credit policy. Number 5, standardize your messaging and your processes. Are credit collections messages consistent across employees? Do employees waste time creating the same email or letter over and over again? Is it difficult to train a new or junior employee? Some things we can do: develop standardized call scripts, create template letters and emails, map messaging to our corporate plan and our departmental goals, and develop a collections process. I've talked to a number of organizations where they have, more than one person that's involved in credit collections. And let's say we have one employee and, they're very strict. It's almost like you have a dictator on the other end of the line. They're not flexible. And you don't want that from a corporate perspective, right? You don't want to have that dictator mentality. These are your customers after all. Then on the complete polar opposite side of that, you have somebody that's very timid. They're afraid to call. They don't know how to ask for payment. And they're not getting, again, across the message that you want to your customers. With a system and a process and a policy, you're able to say, here's the call script. Now, you don't have to memorize it, but this is what we want you to say. This is how we want you to say it. And that process then can flow from the time that they're past due, to 3 days past due, to 5 days, to 10 days, to 30 days, to 60 days. And the messaging and the tone of the message can change the more severe and the more critical and the more urgent that issue becomes. Number 6, document it. document your activities. Critical questions. How do you know which activities need to be created for past due balances and disputes? Can all call notes, documents, and financial information be accessed from one location? Or your employees having access to mobile systems and outdated information? Are they spending a lot of time just trying to prepare for who do I call, when, and why? Is it easy to create and log inbound and outbound email communication? Or are you using a personal inbox for that nobody else in the organization has access to? Does the system provide access to contacts, invoices, payments, other account information? Can you document and report against expected payments? Is the system secure? Can you schedule activities? And is it easy to analyze and report on those activities? Number 7, managing disputes. If you're going to offer credit terms to customers, you're going to end up with disputes. It's kind of the nature of the beast here. How are you going to manage those disputes? Can you exclude valid disputes from your reports so you know that these are going to work their way out? I've already addressed them. Can you mark an amount in dispute different than the invoice amount? Or can you easily see all disputes for all customers? Some suggestions here. You want to document standardized dispute procedures. How do you handle it? Who handles it? What's the process that it goes through? And those might change depending on the nature of the dispute. If it's a shipment issue, maybe it goes to the shipping department. If it's an accounting issue, it goes to accounting. If it's a quality issue, maybe a product quality issue, it goes to whoever handles your RMAs or your quality control department. So you can have a different process for different types of disputes. Suggestions here, pretty straightforward. Document and standardize your dispute procedures and clearly define who is responsible and how you want that managed. Centralized data. This is pretty key. What kinds of things do we need to be effective in credit collections management? We need notes on the account. We need to know disputes. We need to know recent payments. We need to know invoices. We need access to statements. We need to see what the last phone calls were, if there are any scheduled activities or what activities were completed. Email in and out, right? Email we sent to them, email they sent back to us. Expected payments. They told us they were going to make a payment. When did they say they were going to pay? How much? And then all the supporting documents. Is it they require a proof of delivery if you're a distributor. Maybe they require a copy of a timesheet if you're a professional service organization. Maybe it's a bill of lading. Maybe it's a pro number if you're in freight management. So it could be a lot of different things you need to provide for them to even be able to make a payment. And it's important to have this information right at your fingertips. Manage your resources. Number 9. Some suggestions here. Assign your top accounts to dedicated resources. If you have, 1,000 customers out there, pick your top 10 and assign them to one person so that they're responsible for working on them. Integrate schedules. Make sure that your resources are being effective. Make sure that they're not overworked. Make sure they're not underworked. If you have more than one person on your team, you can kind of divvy up responsibilities a little bit. Let them collaborate. Assign tasks and activities so everybody knows what they're doing or what they're supposed to do. And then maximize available resources. You might have an office manager that has an extra 4 or 5 hours available each week. Could you have this person make those first phone calls? Probably. A little bit of training, you can maximize your internal resources that are currently underutilized. All right, cost of credit. This is important. What we find is when we work with a lot of companies, their processes, they print out the aging report and they start with Aztec Industries and they work their way down to Zebra Enterprises, right? That's not real effective. What you really want, in a lot of cases you don't have the time to call everybody, is who is the most important phone call that I need to make right now? Cost of credit allows us to do this. What cost of credit is we allow you to define an annual percentage rate for the cost of cash. If you were to go to your financial institution and borrow money, what would that APR be? typically 6, 8, 10%, something like that, depending on your business credit. We take that APR, we multiply it times the amount past due, times the amount of days past due, and we can tell you what are your customers costing you above and beyond your agreed upon credit terms. And then I can filter and report on that and say, all right, well, I'm going to start with a customer that has the highest cost of credit. And then I'm going to work my way down. And it may not be Aztec Industries, right? It might be Zebra Enterprises. That's the first call I'm making in the day. 11, be proactive. Most companies want to pay their bills on time, and it is your fault. It is our fault collectively that they don't. Incorrect invoices, late invoice delivery, slow dispute resolution, poor communication. We need to be proactive, get out there, talk to our customers. We need to have a process so that we're sending a reminder 3 days before the invoice due date when it still has a balance saying, hey, just want to make sure you got the invoice and that there were no problems with it. The earlier we can identify these disputes, the earlier we can resolve them, the quicker we can get paid. Don't wait for outstanding AR to be uncollectible. We looked at those stats early. If it gets to 3 months, you're losing a lot of money. If it gets to 6 months, you might as well turn it over to third-party collections. And if it goes to a year, write it off as bad debt because 90% of it's gone. You know, remind your customers to pay before they exceed their terms. Escalate difficult cases to senior managers so they can resolve those issues. Involve everyone, finance, sales, other departments when needed. 61% of payments are late due to compliance problems, admin problems such as incorrect invoices, receiving an invoice too late. This again was from that one study we referenced earlier. 12, focusing on the key accounts. Identify late pay customers and assign these to one person. You know, if most of your customers are paying on time, then don't worry about them, right? Take the customers that you know you have issues with, assign them to somebody so that they can handhold them. If 10% of your customers account for 90% of your outstanding receivables, then manage the 10%. That's 90% of your revenue. That is 90% of your cash flow. That's 90% of your potential risk and issues in credit collections. It's a lot, and if I have 100 customers, it's a lot easier for me to manage 10 of them than 900, right? The other 900. Consider revising credit terms and credit limits. Classify customers based on their payment history so that I understand that these are good pay customers. I want to put them in a separate bucket and kind of have a different process for them. And these customers are more difficult. Maybe it's due to the complexities of their business. Maybe it's the complexities of the products that they buy. And again, identify who's costing you the most money, and that's your first call in the day. Automate what can be automated. This is huge. I used to do credit collections when our business was a lot smaller. And what would I find myself doing? I would type an email, Mr. Customer, you are late on these invoices. I'd have to go look up the invoice, and then I'd have to attach a copy of those invoices to make sure they got them, because I knew that was the next question, right, was, hey, I didn't get the invoice, send them to me. And then I'd go and I'd type another email to a different customer. Dear Mr. Customer, you're late on these invoices. Here's a copy of the invoice. It's very tedious. Why should I have to do that? That's why we have technology. That's why we build Anytime Collect. All of your mundane communication that can be templated and automated, I shouldn't have to do that. I should be managing by exception. I should be talking to customers about disputes. I should be talking to them, building relationships, and getting them to make payments when they just get lazy. Some suggestions on things you can automate. Invoices. If your accounting system can't support automated invoice presentment, we can do that. Statements. A lot of companies don't send statements anymore. I encourage them to send them. Again, if you have an email address or you can do email to fax or something like that, send the statement. It's not going to hurt you. Utilize templates and systems to send mass mail notifications to customers that meet different criteria. Right? If all of these customers have invoices due in the next 5 days and we haven't received payment, send them all a reminder. Implement a system, a simple document management system to provide electronic copies of those critical documents along with all the supporting documents. Again, a lot of this can be automated. Another secret, secure your information. You do not want everybody to have access to this information. That just makes sense. So critical issues, we need to control who has access to modify customer address and contact information. Need, for a large organization, comply with Sarbanes-Oxley and other security mandates. We need to limit who has access to our customer list. We do that a lot in CRM, but if you're not doing the same thing in the credit collection side, you know, your AR clerk could walk away with every single one of your customers. And align access to the roles and the responsibilities that that person has within the organization and within the credit collections process. Big one here, involve your sales team. Let's think about it. How long does it take me to win a customer? Who is the person that sold the product or service to the customer? Who's the person that probably has the best relationship and is my face to the customer? It's the sales rep. So why do we not involve the sales rep in the credit and collections process? It's a no-brainer to me. And it really makes more sense when you think about it. If I provide a product or service and you don't pay me, did we really sell anything? You know, collecting on accounts receivable is just completing the sale, as my good friend Dave Walkingbear would say. So could sales be more effective if specific customers have different credit terms or credit limits? Let them be involved in this process. Would customers pay on time or maybe spend more money, buy more product and service if the credit terms and limits were changed? Sales reps should be talking to your customers more than credit collections. And then consider commissioning your sales not on invoicing, but on what you've received in payments. You know, to me, again, this is a no-brainer. Sales should be involved. Credit collections is really an extension and a critical component of the sales process. Escalate troubled accounts. When should an account be escalated to management? Is it based on days past due or a total amount past due? Is it based on the cost of credit in excess of a certain amount? How do you manage the handoff from one person to another? Where's the history, right? If I'm managing a process and it gets to 30 days past due and I've got all my notes on everything I've discovered so far, and then I go to escalate this to my manager, I have to go through all my email, I've got to go through all my phone records, and get all this information over to them. It's going to take me time to do that. It'd be much better if I had a system where I can basically take and document everything I've done to this point and then reassign that issue to somebody else, right, my boss, and they can log in and see everything that I've done and then take it from there. Is everything streamlined? Can we easily identify which accounts need to be escalated? Last point here, the last little secret, and there are many more, of course, is work as a team. Consider assigning those key accounts to specific resources. Manage smaller accounts as a team instead of assigning them. Always have a backup. In any situation, you should have a backup, right? If you lose your accounts receivable clerk tomorrow, who knows how to manage this process? How long is it going to take you to get them up and running? There should be somebody cross-trained to take over in the case that they're no longer available. Offload your smaller account activities to underutilized resources. If you have that office manager that's, you know, taking an extended lunch 3 or 4 days a week because they have nothing left to do, let them manage some of these smaller accounts, or maybe earlier in the process sending out the reminders. Minimize risk associated with the loss of a key employee. Encourage teamwork and open exchange and dialogue. Let your employees, you know, continually improve this process for you. Incorporate everyone: finance, sales, quality, engineering, professional services, whatever the nature of your business. Involve them into the process. And automate and enable collaboration and availability of timely and accurate information. Right? It's all about working as a team. So those are the secrets. We've talked about the importance of managing your AR. We've talked about some ways that you can do this. And now I want to show you a better way to get paid faster, and it's called Anytime Collect. We're going to keep the commercial real short here at the end. This is just one of the many quotes we've had from our customers. Anytime Collect is a much better system than the $1 million system I used before in the areas that it performs the same tasks. We've had some customers we profiled with ERP VAR in the past that have reduced their DSO significantly by as much as 40% in the first year. We had one customer that collected more money in 2012 that they invoiced because they were able to go back into previous years and collect past due balances. This is a system that's going to really streamline this process for you. So I want to kind of outline how it works. So you've got data in your accounting system, right, your ERP system, whether it's Epicor, QuickBooks, Microsoft Dynamics, one of the Sage ERP products. We don't care. We integrate to them all. And you have data there, right? Data resides either on the cloud or on-premise. It includes your invoices, your customers, your contacts, payments, payment applications, all that stuff. Okay. What we do is we have this scheduled data synchronization. You set it up and you say, I want to go out and get this new information from your accounting or ERP system every day at 5 o'clock in the morning or every 3 hours, or however you set up this data sync. That then moves that information into either an on-premise installation of Microsoft SQL or into Microsoft SQL Azure, which is basically hosted SQL online on Microsoft's cloud. And we support both models here. Then what you do is you access the software by logging into a browser. We support all the major browsers. The application itself is written in HTML5, connects to the database, you organize everything, and make your job a lot easier, as well as a lot of the automation that we talked about earlier. So what does Anytime Collect do? It can automate your email, or you can do manual email. It has mail merge templates, so if you want to create dunning letters, past due notices, collection letters, statements, we can do all of that from mail merge. It can build a prioritized call list so you know who to call, why, when, and that list can be prioritized for you, so you're making that most important call first. All the information is centralized, so you don't have to go hunt and peck in 15 different systems to find out what was the last email, what was the last phone call note, who's the other contacts, where's the invoice, etc. We've got dispute management built in, so if there's a dispute, we can identify the reason for the dispute, the amount that's in dispute, and then manage that through to a resolution. We have cash forecasting, so we can know based on our collection activities what kind of cash should we expect over the next week or 2 weeks. We also support online customer payments, so if we want to enable a customer to pay online via credit card or ACH, that is also available to them. And then we have the business intelligence we talked about earlier, setting goals, metrics, performance indicators to understand, are we being effective? Are there areas where we're falling down, where we need to improve? Being able to have that visibility to continually improve the process. So from a business intelligence perspective, we have a dashboard, we have reports and inquiries, we can trend our day sales outstanding, we can see how customers are paying us based on different sizes of invoices, and we can see where our accounts receivable is standing. We have account management, right? We can get all these reports, all this information across our accounts. And then we have reports and inquiries to go along with this. Communication history, again, in one place. Did I make a phone call? When was the last time I called? Did I send an email? Did I receive an email? Do I have a dispute? Do I have an expected payment? Was this communication I had with the customer related to an invoice? If so, which one? All of that we can do within the software. Templates, we can set up as many different templates as we want from an email perspective. We can have the system then use these to automate a lot of the communication. Or we can use these just as a shortcut, so when I'm in there trying to create an email, I don't have to type the same thing over and over again. I can pick a template and then tailor it and send it out. Also worth mentioning, we can have different workflow for different groups of accounts. If I have government customers that have a different process and workflow than my commercial customers, my consumer customers, I can have different templates, different reports, different processes. When do I call them? When do I send the email? All of that is completely configurable. And then from a communication standpoint, we're putting everything in one place. I can see contacts, I can set follow-ups, I can reassign activities to other people in the organization. I can look at invoices, I can manage disputes, I can log expected payments, I can send emails, and do phone calls all in one screen. Online payments, we have the ability to send out a link to your customers. They click on that link, it takes them to an online portal. They don't have to remember a username or password. They can view and retrieve their PDF copies of invoices. They can select which invoices they want to pay. They click the Make a Payment Now button. Takes them out to a PCI compliant payment page, and they can make their payment online. Some free resources that are available if you guys are interested. I'll go ahead and send these over to Adrienne, and she can share them with you, or you can get them off of our website at anytimecollect.com. We've got a number of different white papers, a couple of them here. How many employees do I need to effectively manage accounts receivable? A lot of people don't know what their staffing should be like. We have a white paper around kind of how to figure that out. There is a white paper that accompanies this presentation. It's titled 17 Things You Should Be Doing to Reduce Outstanding Accounts Receivable. A little more content than what we went into today. How to eliminate accounts receivable invoice disputes and get paid faster. 6 steps to developing a world-class business credit policy and collection action plan. And then the last one here is how to develop killer accounts receivable letters, call scripts, and email templates. So whether you guys are really interested in Anytime Collect or not, certainly I think we can help you out. But if you just want the free resources, that's fine. There's a lot of things in those documents that you can implement without a system. Okay. And with that, we're going to conclude, and I'm going to turn it back over to Adrienne. I think we have a survey. And while we wait for Adrienne to kick that off, my contact information is up here on the screen, and I spelled our website wrong. That's lovely. Anytime Collect, not anytime collect.com. So there you go, Adrienne.
All right, thank you so much, Jim. Great presentation. We do have a question. What ERP software systems do you have currently integrations with?
Yeah, that's a good question. So we integrate to QuickBooks, Sage 50 US, which is Peachtree, Sage 100, Mass 90, Mass 200, Sage 300, which is ACPAC, Sage 500, which is Mass 500. We also integrate with Epicor ERP. That actually is sold under a private label through Epicor. It's called Epicor Cash Collect in that environment. We also integrate with Microsoft Dynamics ERP solutions. And there are others. If I didn't mention it, there may be a standard integration. We do also have a CSV or a generic flat file interface that we've used for customers on a variety of other applications. SAP Oracle, trying to think Infor, a lot of the Infor products, Macola. So we can integrate to just about everything out there. I know the next question will be pricing. The product's available either as a subscription or a purchase. The subscription pricing starts with our basic edition, which is QuickBooks only, and has some limitations at $50 per user per month. Most customers are going to fall into our standard edition. That's $150 per user per month, and that is a named user. Or they can choose to purchase it outright. You're looking at, a couple $1,000 investment to get started with the application. But you're going to get a very significant savings just by reducing bad debt write-offs and getting paid faster.
And if I could just ask the audience to answer this poll up on the screen. I see that 75% of you have answered. If I could get the remaining folks to answer this poll, that would be great. And Jim, I don't see any other questions at this point. If you do have a question, just to remind the audience, there's a question mark button right next to your name on the webinar pane. If you click on that button, a dialog box will come open, and just indicate your question in the dialog box, and we'll go ahead and read it off. And I see that we have a question. What's the cost of the payment portal, Jim?
The payment portal will vary. We actually work with a partner that manages that. I know we do have some Sage customers that are on the call today. We do also work with Sage Payments. If you're interested in the payment portal side, contact us. What we need to do is we'll need to get a statement from you on what you're paying today and what your rates are. And then the partner that we work with on that will actually evaluate that and provide you with a custom quote. In most cases, they're going to be able to reduce your credit card fees fairly significantly. We have one prospect that looks like they're going to save about $80,000 a year in credit card payments just from the fees they're getting charged. So it will vary. It depends on the nature of the invoice. It depends on the nature of the industry. It does have to go through underwriting. As far as the portal itself goes, accessing that, I have to remember, I want to say it's like $20, $30 a month for up to 100 transactions. So it's very, very affordable.
And Jim, how long does this typically take to implement?
Another great question. So for a very basic implementation for some of our smaller customers, I mean, you're looking at maybe a day's worth of time to do the initial setup and then maybe a couple hours to do the end user training. We've had other customers, when we support multiple companies, we support multiple ERPs. So, I mean, you could have data in an Epicor system, data in an SAP system. We could be pulling it all into our application. I'd say on average you're looking to no more than a couple days worth of work. In some of the larger environments, it could be a week, it could be a couple weeks. But safe bet, you're looking at probably a couple days for most of the folks on the call.
And did you say that you offer training included?
We do, yes. So we will provide services along with the product quote. The services are time and material. We do try to get part of that up front just to cover the kind of the bare bones stuff that we need to do from a setup perspective and a high-level user training. And then it's all time and material after that. If you need more assistance with more advanced configuration, setup, if you want more end-user training, we'll provide that as needed. And that is all provided remotely. We have had some customers that were kind of out of the box a little different than what we offer. So we have done, on a rare occasion, some on-site implementations. That is not out of the question, especially if you're in Hawaii and it's February and we're here in Cleveland. We would love to go implement you on-site.
So, perfect. Well, I don't see any other questions. If you do have a question, please go ahead and click on that question mark button next to your name on the webinar pane and indicate your question in the text field. And if you don't have any other questions, I'm going to go ahead and close this poll out so that you can see Jim's contact information. And the website is spelled anytimecollect.com, not anyimcollect.com. There's just a typo in that. And Jim Mallory is a contact. He goes by either James or Jim. He's not particular, right, Jim?
Nope,
and
not
then,
at all.
And then the phone number is 440-352-4700. And with that, I don't see any other questions. And Jim, would you like to close it out with anything further?
No, I just like to close it out kind of like I always do. We get excited, we sit in on a webinar, maybe we get a couple ideas, and the next thing you know, we get busy and we don't really do anything about it. I just encourage you all to go back and try to implement one or two things that maybe you've learned from the webinar today, or at least set some sort of a process in place to improve. AR is critical. I mean, it is our #1 source of working capital. And it has tremendous value for organizations. So whether you buy our software or not, hopefully I do. I think we can help you significantly. Go back and try to implement something that you learned today. That's really my only kind of suggestion in closing is let's make something happen of this this presentation.
Thanks so much, Jim, and everybody. I want to thank you for joining us today and spending time with us. And I will be sending the recording out after the webinar in addition to the PowerPoint and the white papers that Jim had referenced. So if you have any questions, please feel free to either respond to my email or reach out to Jim via his contact information on the screen. And we would love to assist you. Thanks again. Thank you, Jim.
You're welcome. Thank you.